Sandip Sabharwal is also
Thank you.
ready. All he has to do is just sit in his car, take a U-turn and come, or perhaps walk to our studio. That invitation is on from 2 years now, and Sandip Sabharwal refuses to come to the studio. See, we are invited by manufacturing companies to come to Bangalore and visit the plants. And I'm extending an open invitation to join us at studio for the morning show, which is like half a kilometer away. Kab aayenge?
I'm happy to go to this factory with you.
But I'm talking about my invitation that you should come to the studio. And if I just share with our viewers that what is the distance, the compound where we are in, the adjacent building is where he lives. Next गली में. गलत तो नहीं बोल रहा हूँ.
Yeah, but you set up that wall now.
Markets always climb the wall of worry, Sandeep. You should climb that wall now. It's very rare that Sandip Sabharwal becomes speechless, but today I managed to convince him. He's speechless for a change. वो rare moment है, right, Nuresh? Sandeep speechless होता नहीं है कभी.
Yeah, so there are way too many walls of worries in between, I think.
Sandeep, what about the market? I mean, it's the other way around, right? Markets went up, ignored all the worries, and now the reality is just dawning on us. It's the other way around.
So I think what the reality, what is dawning on is that the results which were expected might not be as good as what people were expecting, and that's what we've seen with the large cap technology results, which excited a lot of people. But I think there are worries out there, and next year will not be as good as what people expect. Then we had two insurance companies which also disappointed, and HDFC Bank. Now, IndusInd Bank results were slightly different from HDFC Bank, that they were able to maintain their name. But then there is some stress on the balance sheet, so they use their contingency reserves to show better results. So the markets overall are priced in a sense. So we need some sort of value correction, some sort of time correction for the markets can become healthy overall for patient needs.
I saw your tweet. Everyone is asking me at what level to buy HDFC Bank. That's a right question. I mean, the numbers were not that bad. So while we can say that that is an indicator the appetite is still there, the bulls are still happy to buy HDFC Bank, but is that a reasonable question to ask at 1480? The stock has done nothing in last 3 years. Numbers are not that bad and it's got punctured yet. That at what level to buy HDFC Bank?
No, it's not a wrong question, but the whole point is that if you are already loaded on with HDFC Bank, why do you want to keep on buying the same stock again and again, and it make it an unwieldy part of your portfolio? So if you don't have HDFC Bank, then it might be a right question. And to that extent, another 10 to 12% down might be a good level to buy the stock. But if you already have so much, then it's a wide open market. There are so many other stocks. Why do you want to buy only one bank, one stock, where much of the distinguishing features which it had vis-a-vis other banks is no longer exists?
Okay. I just want to look at the FI data now. A point which I think we discussed on 2nd or 3rd of Jan, and YTD data, which is month-to-date data also. But compare that number with what we've seen in November and December. November 3,800 crore, December 3,100 crore, and month-to-date already negative 19,000 crore. And Sandeep, this is a big departure from what everyone assumed. The consensus view was 2024 FIs will come. They will come aggressively, allocations will increase, and there could be a FOMO from FIs which will force stock prices to go higher. The reverse is happening.
So for long-term investors, this reverse is good. So we don't want a bubble to build up to such a big level from where there is a big crash. So we are at levels where a moderate correction will lead the markets to come back to reasonable levels. And what we are seeing has two parts. One, record high valuations of India vis-a-vis the rest of the emerging basket. And the second is the overall non-performance of the emerging market basket, which is leading to outflows from ETFs. And this could continue for some more time.
Sandeep, morning. Let's also get in your take as to what the expectation is from heavyweight Reliance Industries. It won't be the reaction that we'll see play out on Monday this time around, Saturday itself, but what is it that you're expecting?
So in this time, expectations are low from the oil to chemical business, retail business, telecom business. So most of the businesses this time the expectation is not too high. The key to watch in Reliance, always from my perspective, is what is the kind of fresh investments they do. Are they generating any free cash flows, etc. And which is the biggest reason why the stock has not performed? Because back in 2020, they made a statement they'll go debt free. Then they started on a new capex cycle, so which obviously impacts the return ratios and the performance of the stock price. And I think that will be critical for Reliance over the next 1 or 2 years.
The last month or so, have you profit taken anywhere in your mid or small cap holdings?
So a lot of the small and mid caps, we don't see longer term concerns, so not too much. But we are maintaining around 15 to 20% cash to deploy on downturns.
Meantime, we'll also be watching out for some critical numbers coming out tomorrow. There's Kotak Bank as well as an ICICI Bank that will be coming out with their numbers. So that as well will be closely watched out for by the street. What's happening when it comes to the pre-open rates right now? Well, owing to the fact that, by the way, it was a fairly healthy handover from Wall Street, Asia as well for the most part was in the green. For now, it's 1.5% nearly on the Nifty, and for the Sensex as well holding out in the green. Given the movement that we've seen over the past couple of trading days, I'm sure this will be fairly comforting. Kunal, your mid-cap trades?
Well, yeah, from the mid-cap arena, I would bet on Som Distilleries. That's a stock which has been, I think, correcting around 30% from the last 2 or 3 months high of around 385, 395 for the stock, came down to sub 300 levels. Now, in the last 3-4 days, there has been excellent change in terms of the volume patterns, the stock taking support at 200 moving average and now inching back above that 300 level. So, would suggest a buy with target of 330 and stop us at 290.
Right, Naresh, what about your strategies?
So that would be a buy on IRB Infra. The stock has given a breakout before and now consolidating, making a flag formation. Showed a lot of relative strength yesterday. Even when the markets were correcting, did not see any fall. Expecting further move up towards the 55 mark. Stop loss now at 44.
Well, early morning you're recommending a liquor stock.
Friday.
So, कल market चालू है. वही तो बता रहा हूँ इसलिए. Markets are on tomorrow.
But I'm a teetotaler anyways.
Okay. So technical breakout, nothing.
Says Nikunj.
Yeah. Boost is the secret of managing one of those. Okay. The pre-open rates are indicating that 288 points up for Nifty. These are pre-open rates. They will settle down. I don't think we are in for that kind of a gap up start. HDFC ADR was up, so that I think is a reasonable assumption there where markets would open. Sandeep, in general, is it time now to take some serious money off the table in PSUs? Because if the market mood is nervous, if there is leverage reversal, then that's one space which fundamentally and technically was overbought and fundamentally was frothy.
It's frothy because people are getting into PSU stocks irrespective of valuations, and they've become sort of meme stocks. You look at the charts of many of these stocks, it's like a cliff. And when you climb a cliff, typically the fall also is big and drastic and can be very sharp. We saw a similar thing in IRCTC, IEX couple of years back, and the same could repeat in many other stocks this year.
Okay, insurance is one space where I just want to look at names where the market reaction has been very, very magnified. First, we've spoken about HDFC Bank, let's keep it up. Polycab, let's look at, you saw a very sharpish kind of a reaction even in ICICI Pru Life, LT Mindtree, let's look at some of those stocks. So, ADR is up, pre-open rate, the stock had to bounce back, it is bouncing back. I think it will find its feet sooner than later. But everyone is in a sense swimming in the stock. So I don't think the appetite to really buy fresh or buy large is going to come back in a hurry for HDFC Bank. ICICI Pru Life seems to be bouncing back. L&T Mindtree seems to be bouncing back. Stocks in focus today, it will be IndusInd Bank and Metro Shoes. Sandeep, we are getting now signs of what could be called as slowdown. There's a slowdown which Metro Shoes has declared. There's a slowdown which some of the internet companies are indicating that consumer is slowing down. So is that one pocket which is called as the urban luxury consumption or the luxury consumption? Is that pocket now in for some bumpy ride aheads?
Yes, so the bumpy ride has been continuing. Now, some of these stocks held on and did not correct because I think they kept on pumping inventory in, and whereas the other companies stopped doing that. So that's why we see some disparate results in this quarter. But the consumption slowdown is a reality, and when it will bottom is tough to say. But normally it tends to bottom once inflation gets stabilized, and then there's a pickup. So hopefully from this quarter we see some signs of a pickup, which could continue into 2024.
Thanks so much, Sandeep, for joining in, and hope you have a good weekend. Maybe not tomorrow. Maybe it'll start tomorrow afternoon.
Coming tomorrow. Hello, Sandeep. I hope you block the calendar early morning. Pre-open session with Sandip Sabharwal.
I refuse to do anything tomorrow.
But
So I'm
markets
not
are
going to
open.
open my
Markets
screen.
are open tomorrow. Okay, so coming to studio then. So choose. Studio
I'll
or
ignore the market.
Well, just in case you change your mind, the pre-open begins at 9 a.m. tomorrow. Pre-open is going to end at 9:08. The normal market open time is 9:15 and closing time is 10 a.m. Then, of course, there's going to be a second trading session as well, wherein the pre-open session is going to begin at 11:15. Market opens at 11:30. Close time is going to be 12:30. The closing session will begin at 12:40 and closing session ends at 12:50 p.m. So